Good evening, everybody. Welcome to the Locke in Your Success Trade and Market Update for April 7th, 2013. Before we get going, we'd like to remind you that the presentation is for educational purposes only. We're not broker-dealers and are not making any specific trade recommendations. Also, the risk of trading options is substantial, so please be aware of all your risks prior to placing any trades. And make sure you thoroughly understand the characteristics and risks of standardized options prior to placing any trades. Also, any trades or results covered in this presentation may or may not be live. Any computer simulated trade results or trades are believed to be as accurately represented as possible. However, live results may vary. I'm going to make this short tonight because I'm running a little short on time, so I apologize for that. And I'm just going to skip right ahead to the Russell for now. We were talking last week, we thought the market was going to push into a sideways mode, and I was more or less expecting the market to come down to this 930 level, possibly down to the 920, which it did. We did get a penetration of our support level with the news on Friday. We had some bad data, which had been pushing the market down. It's the SPX and so forth. If you take a look at those, didn't get pushed down hardly at all, and they pretty much remained in their sideways range here. The Dow, also very strong last week, remained in a sideways range. Also, the NASDAQ did have a fairly big drop on Friday, but in general it recovered most of the way here to come back up at least close to its sideways range. So what does this mean? The Dow is still very bullish. We had a little bit of bearish news, but a very bullish candlestick we put in here on Friday. The SPX held support for now and continued its sideways range, so that remains sideways. This here can be considered a support break. We'll have to see what happens with this on Monday or tomorrow. And should we break up back over this area here, then that would be more or less very bullish for the markets, and you'll probably see some sort of breakout in the Dow. If not, then we're going to tend to remain sideways. My guess here is the NASDAQ remains sideways, and that's going to be between this 2750 and the 2825 range. I would guess on the Dow here, we're going to continue to go sideways. I'm not sure if this support level is going to hold or not. I think we see some sideways turning this week. Of course, on the SPX, again, this level held, which is looking pretty bullish at least for now, and I expect continued sideways. And on the Russell, the same type of thing. I would expect we'll have to watch this level up here at about 931, 932. If that holds, then that could be a little bit bearish for the Russell index. However, if we break back above that, that's going to be bullish up to our previous highs. I don't expect us to break the previous highs. I would expect a continued sideways motion from here. So we're more or less neutral on the market right now. Of course, we do have earnings coming out that could push things one way or the other. If we had spectacular earnings or more bad news, could potentially push the market down, especially the Russell down to this 890 level, since we did have this somewhat of a support break here. I wouldn't be surprised to see that either on bad news, but with a lack of bad news, I'd expect us to be continue up in this range here, 920 to 940. All right, let's quickly run over our trades here. We had a lot of adjustments this week on pretty much all of our April positions. Let's take a look at the simple ones first. Our V Condor for April only had one minor adjustment, and that was on Monday. It wasn't a necessary adjustment. If we take a look at this thing, when the market started coming down on, if we come back to Monday, when it seemed apparent that the market did not want to continue to go up, and it looked like it may be coming down, what I did is I took this 940 put and I rolled it all the way 20 points to 960, just to raise our T+0 line graph a little bit. So if we go to the end of the day and we check the analyzed graph, we can see that this call that was down in this area got rolled up to 960. It raised our expiration line up so that it is 3,200 profit. And if we run this to today or Friday afternoon, as of 3:30, the position is up about $2,300. If you take a look at our analyzed graph, it looks just like this. I don't see any problems with this whatsoever. I may end up rolling this straddle out a little further in either direction if the market tends to sit here, which I do expect it to do. I'll give it a little more time to choose direction before making the adjustments. There's really no need to do anything here. If I can't get any more value by widening these out, we'll just expire it wherever we have. Who knows, maybe we might shoot up and make a little bit more money, either shoot up or down. But this position looks good and should bring us a decent profit this month. If we come to the V Condor for May, I did the same type of adjustment on this. If you'll take a look at our T-log on Monday, I sold the 930 call I had as part of the straddle. I bought a 960 to raise my expiration graph a little bit since the market hasn't been going anywhere. And on Tuesday, I rolled it out 10 more points to 970. So if you carry that forward to today, this is what the current position looks like. Again, this is doing fine. We did have that increase in volatility, but nothing too serious. Haven't had to make any serious adjustments, just a couple of minor ones to the upside again to raise our T+0 line. If we kind of hang in this area here, we might be looking at a $3,500 profit later in the year. Or, of course, if we continue to crank up towards the 1,000 level, that would be fairly good to us. If we come down at a moderate pace to, down into here and hold the 890 level or so, this really shouldn't be a problem to the downside either. We shall wait and see, but this trade still looks really good. If we shoot up to our April M3 trade, this got kicked around this week quite a bit. Let's see, we'll come on up in here. Our position currently looks like this as of Friday. I'll kind of show you how we got here. We started off the week in this position here. As the market started to fall, I started backing out of these verticals. So I have 10 long 870s, 10 short 920s, 7 short 940s, 3 short 950s, and 10 long 970s. The market came down, I backed out of these verticals. Now I don't normally do that. Normally what we're going to do, at some point we're going to start rolling the butterflies back. I did not do that in this particular case. I was expecting the market to hold. I wasn't expecting a drop like it did, so I was kind of playing games a little bit here. And with the larger market drop, then obviously that hurt us a little bit. At the end of Monday, this is what the position looked like here. It looks very healthy. Gamma trend was a little bad, but there was really no issue with this at all. That's after I rolled some of these puts back. If we shoot to Tuesday afternoon and we go right to the end of the day, what we did is I bought another 950, 940 put vertical, which brought us back to here with all our puts for the upper side. And then I bought two 920, 910 put verticals to roll this a little bit further away from the market. This is the point here where I really should have rolled this back. And by guidelines, it should have been rolled back. Like I said, I was expecting the market to hold the 920 level, and I was willing to make a bit of a bet on that. So again, my gamma trend's bad. So let's roll it forward to Wednesday. We had a continued market drop to 918. Again, that was about where I was looking at the market to bottom out. I came in here and I rolled back the 910s all the way to 900. And this is what our new position looked like. Still very healthy. I was expecting this area to hold here. Of course, then we got the gap. Of course, after Thursday, we were perfectly fine. The market settled out a little bit, and things were looking good here. This is no longer a typical M3 trade. This is more of a condor type of trade at this point. And I had a plan for an upside plan, and I had a downside plan. See, I only had 25,000 in capital in this. I was ready to move on either direction if anything were to happen here. I was expecting more of an up move than a down move, or actually more of a sideways type of a thing, and for us to maybe settle up in this range somewhere, which would have been really nice for the trade. We got a hard down move on Friday morning, and with that hard down move, I did a complete position readjustment here. I went and I bought 10 900 890, 870, 840 put condors. That rolled my 900 shorts to 890, and it rolled the long strikes all the way down to 840. And then I went ahead and sold two 920, 890 call spreads to roll my long call here down to 890 to put myself more positive delta, and I added another 890 call to put myself more positive delta. I also sold 10 970, 940, 910 put butterflies, and that rolled the upper half of my spread down to 910, 940. And all those moves put me into a position that looks like this. And I did this in the morning when the market was down. Of course, the market whipsawed us, and we had a very hard up move, which put us down a little bit of money here. But this position still looks good. I'm going to be somewhat aggressive with this, with vertical spreads to the upside, even though I really don't think we're going this high again. I am going to try and stay with it just in case, so that we can be profitable if the market decides to take off to the upside. And of course, if the market kind of peters out here and drops off, then we'll be looking really good. So this trade's still doing fine. Would have been nice had I managed a little bit better during the month, but you know, sometimes you manage them well, sometimes you don't. And so we're sitting here down a couple percent, so no big deal there. The other trade we have going on is the April Bearish Butterfly, so we'll take a look at that. This started out the week in pretty good shape. We're sitting here, and this was drawn down earlier in the month, and it came back and was actually starting to do fairly well. Here, you know, all we needed was the market to settle out for us. However, that did not happen. So we'll shoot ahead until Tuesday. And on Tuesday, when the market dropped a little bit more, I ended up I ended up buying 7 920 put butterflies here to deal with the down move. And I'm simply just starting to scale into these butterflies as per expiration guidelines to keep our delta in line. And we were able to maintain this Tuesday pretty well. On Wednesday, with a fairly aggressive down move, we got down a reasonably large amount of money here. We got down to about 1/3 of our maximum loss number, which isn't a surprise with the big volatility increase and so forth. For adjustments, we ended up pulling off all of our 960 butterflies. We ended up adding in to our 920 butterflies, so we now have 10 of those, and the position looks like this. Like I said, the volatility drawdown hurt a little bit, but it wasn't too bad. And then if we take a look at Thursday and Friday, nothing actually happened here. We didn't need any further adjustments. Even with the gap down on Friday morning, we had no problem. And if you run this all the way till Friday afternoon at 3:30, position has gained back some of the losses. I would say if Monday is flat, then this is going to be coming very close to break even again. So here's what our current position looks like on the Bearish Butterfly. I'm not overly concerned about it, although, you know, if the market gets too choppy this close to expiration, it could create a loss. But so far, it looks good. And last but not least is going to be our ROCK trade. If we take a look at this on Monday morning, this trade looks very healthy. We're sitting here in a regular ROCK formation. As later in the day when the market came down, we did start pushing our maximum delta limits. We allow about a positive 100 in this type of in this trade. Normally we hit positive 100 delta. The first or most common move to do would be to take this 930 butterfly and roll it back to 910, which is very common. I do have an optional move that I can do, and one of the optional things that I'll do is I'll start scaling into these 910 butterflies. That's what I chose to do in this specific case. The main reason I chose scaling in deeper rather than rolling back, if I roll back, that's going to set me up for a higher volatility type of environment and a continued down move, which in this last case probably would have been a good thing. However, I chose the other option to start scaling into the 910s. So if I think I go to the end of the day, I did this right at the end of the day because I was over my maximum delta. I came in and I scaled into two of these 910 10 butterflies, and it gave me a position that looked like this. So I'm starting to scale into these. I'm actually building what we call a reverse rock position here. And if we push ahead to Tuesday, I did just a very minor adjustment as I added another one of these 910 butterflies. And right here, the position is looking really, really nice, and we're up about almost half of our profit target at this point. Had the market settled a little bit, it would have been really nice for us, but as we know, it did not. We had this substantial down move on Wednesday, and with that down move, I ended up pulling off 2 of these 970s and getting fully scaled into the 910s. At this point here, my delta is a little bit high because I think the market sold off later in the day. If I go, well, see, I wasn't aggressive enough even by my guidelines as far as adjustments this day. I'm okay at 1500. When did I put these on? Okay, so I pulled those off at, you have to look at the T-log at what time it actually was. Okay, yeah, that's right. I was on the road, so I pulled them off at some point in that time range between 3 and 4 o'clock. And since I was on the road that afternoon, I didn't pull enough of these off. I should have pulled a little bit more of these off, but nonetheless to say, it's only 120 delta. That's perfectly. That's not terrible. And this is what our position looks like coming into the end of Wednesday. Running into Thursday, there were no adjustments needed. Here's what our position looks like on Thursday. And on Friday, I ended up selling 3 more of these 970s in the morning when the market was down, which puts us in a position of having 2 970 butterflies, 10 930 butterflies, and 10 910 butterflies. That corrected our delta out pretty nicely. And of course, the position got whipsawed a little bit if you come to the end of the day, or at least 3:30 on Friday. The market reversed, not enough to kick us or into any other further adjustments. And this is what the position looks like as of late Friday. So we are currently sitting up about $3,900. We lost about about $1,100 in this over the week. However, the position is looking very, very good. I'm pretty excited about this one actually. If the market decides it wants to creep up into here, this is going to be a really good trade for this, or even if it sits, it's going to be a really good month for this here. So things are looking good. And that is all our positions, and that's my opinion on the market. I hope everybody has an awesome week trading. I'll keep you updated with any changes. Thank you, and good night.